why would our business consider getting a commercial mortgage? And in short, really because of two reasons, either because of cash flow and or future growth and investment opportunities. Many businesses spend a significant amount of capital on their space, and each month they make their lease payment, and as they make their lease payment, they help their landlord pay off the mortgage that maybe they have on the property, or if they don't have a mortgage, then they're a good investment stream or a good investment income for the landlord. And for the last several years, interest rates have been at all-time lows, which means that a mortgage payment each month could be less than a lease payment. And as you would know if you're a business owner or are involved in managing a business, that cash is king, or cash is very, very important. And ownership of a building, believe it or not, might be one way to increase the monthly cash that a business has. And we'll get into how they can do that specifically, but kind of as a side note, if a business is going to buy a property and they're making that decision because the monthly mortgage payment is less than the lease payment, then when they're looking at opportunities, they might end up buying a space that maybe they can help subsidize the cost of that building by leasing out a smaller portion to maybe another business. So there can be very, very good reasons for how a business can take advantage of commercial real estate, change their lease payment into a mortgage payment, and now that they own the building, they might even be able to lease out a portion of the building, which because market rents are pretty strong in most markets right now, that they could subsidize some of the cost of that building. And so from a cash flow perspective, it can make a lot of sense for a business to consider purchasing a building. The second reason for considering ownership of a building for your business would be the future growth and investment. For business owners, purchasing a building and leasing it back to the business can be a sound investment. Many business owners want to take money out of the business, but they don't necessarily want to leave a big cash flow gap for the operation of the business. And so by purchasing a business, or rather purchasing a building and leasing it back to the business, a business owner might be able to take cash flow out that way. And so here's an example of kind of how that makes sense. Business owners typically don't take a salary or a fee from the business until maybe the end of the year, or throughout the year maybe they take a few chunks of cash out of the business. And what that ends up doing, of course, is a business has a normal cycle of cash flow. So they, as a business, you might provide a product or service to the marketplace. You know how long it takes for your customers to pay you. You know what your costs are in paying your staff and paying the government and paying all of the costs associated with running your business. And most businesses kind of get a bit of a rhythm going. And so when the business owner comes along and says, okay, well, this is my business, and I started this business so that I could make money, when they then reach into the cash flow and pull some money out, that can cause problems for the business. So in the context of purchasing a building, because most businesses budget a line item for their space, rent or office or lease payment, what that means then is that instead of that payment going to some unassociated landlord, if a business owner ends up buying a property and leasing it back to the business, first of all, they can make the lease payment more reflective of the mortgage payment as opposed to market rent. So there's some cash flow savings for the business there. But more importantly, now the business owner on a very regular basis, in fact each month, can take cash flow out of the business without it really disrupting the cash flow of the business if they were to take out maybe a dividend or a management fee at sporadic times throughout the year. So cash flow is a big reason for considering a commercial property, but also investment and future growth can be as well. Don't forget that real estate goes up in value, and so if a business is committed to buying a building 10 or 15 years down the road, if they've paid off the mortgage, then they're now sitting on an asset that's worth quite a bit of money. They can sell it, they can leverage it again for times when they might need money. If their business slows down or the market slows down and they need cash to keep them going, they can always leverage the real estate to get that cash out. So if you're interested in seeing what would be required for your business to get approved for a commercial mortgage, you can get started at emilynow.ca. You simply punch in kind of the amount of money that you think your business would need to buy a commercial property, and then you can flow through the rest of the steps and see the paperwork required, see the basic math that the bank is going to want to prove, and kind of see the questions that you're going to be asked before you kind of get too far down the road.